we'll move on to Adobe. The stock's moving higher in the after hours. Josh Lipton has the details on this report. Hey, Josh.
So, Joe, heading into this report, stock got hit in today's trade, but it was still surging, rallying about 50% from its March lows. If you look at the report, just digging into the segments, digital media, that was up 18% to $2.23 billion. The other big segment there, digital experience, $826 million. Q3 guidance was light relative to expectations. I did check in, though, with Kirk Materne over at Evercore ISI. He covers the name. Kirk liked what he saw in this report. Said, listen, digital media ARR, annualized recurring revenue, $443 million. That was above expectations. That signal, Kirk says, that the core business is healthy here. Operating margins, he noted, expanding. So this is a company, he's arguing, that's delivering higher levels of profitability, even during a downturn. Q3 guidance, in his words, close enough to the street's estimates. Guidance will be read, he's arguing to us, as conservative. On the call, the company's CEO, Shantanu Narayen, saying the company's Q2 did coincide with what we hope, he says, was the peak of the pandemic. Nevertheless, Adobe drove strong performance across Creative Cloud, Document Cloud, and Experience. In times of uncertainty, he was arguing on the call, people are turning to Adobe's products to learn and work. In the digital experience segment, yes, the economic challenges, he said, enterprise customers are facing, weakness in small and medium-sized businesses did impact bookings, and as did, he noted, the decline in ad spending, but he called those short-term challenges. For more from the CEO, certainly turn in tonight to Mad Money, where he joins our own Jim Cramer. Guys, back to you.
All right, Josh, thanks. Grasso, you got this one?
Yeah, so the way I would trade this one is, first of all, Adobe's up 17% year to date. So to mute your exposure to any one software name, iShares has an ETF. It's IGV is the ticker symbol. The top two positions are Microsoft and Adobe, and then you get your Salesforce and your ServiceNow below that. This fund, this ETF, is up 19% year to date. So this has definitely benefited from the stay-at-home, shelter-in-place software needs that everyone in this world has needed. I think that for me, I bought this for my kids. I would buy this for myself. I think this is a better way to play it. You don't have to be tied to one stock like Adobe. Although I love Adobe, I think you have to mute your risk and own them all. I own Microsoft as well, but I think that you need a fund like this that helps you blanket that exposure, because this is where the growth is. The growth is not in energy stocks. The growth is not in value going forward. It's going to be right here at the center of tech.